Hi traders, Luke Suddards here, global macro strategist from Pepperstone. So let's dive straight into the charts. We're going to start off as we usually do with the dollar DXY index, and we're going to do something a little bit different today. We're going to add an additional indicator and just walk us through how to use it and what it is. So the two dark blue lines around the price candles are the Bollinger Bands. I've just stuck to the factory settings, 20-day simple moving average, and two standard deviations in terms of where the upper band and the lower band's been positioned. Now, there's various ways that you can use the Bollinger Band. As we know, standard deviation is just a measure of price variation around the average. Now, I've taken out, it's usually a little orange line, I've taken out because I've got quite a few moving averages on here, but it's very close to the 21-day exponential moving average, the 20-day simple. So I thought, that was fine to leave that in. Okay, so one way to use it is in a range bound market. As you can see here, the dollar index was a bit range bound, and you could use the upper band as a dynamic resistance tool and the lower band as a dynamic support tool. So every time it got up there, as we know, 95% of price variation is contained within two standard deviations. Based on recent price moves. So as you can see here, a little mean reversion play, you would short as it got up to that horizontal resistance too, and you use that dynamically, and that would have worked out quite nicely for you. Right now, what we're seeing, we saw this sort of compression regime, and then we had this Bollinger squeeze where volatility expanded. Price is right now up against that upper trend line of the ascending channel. There is a bit of negative divergence on the RSI. We can see here, as price has made a higher high, the RSI is making a lower high there. And we've got a sort of although the London session hasn't started as of recording this, we can see there's a bit of a doji candle there, maybe signifying some indecision, and price has gone up quite extremely. These are big bullish bars, so we might see a bit of profit taking and a cooling off and a bit of a move back down low, potentially towards this 94.5 former resistance, which would become support around the 21-day exponential moving average too. Moving on to the euro US dollar, and then just on the upside, if we do see a breakout, 95.8/96 would be my upside target. And then I've already said on the downside, I'd look towards this 95 round number, and then below there, I'd say about 94.5, this former resistance level here. Moving on to the euro US dollar, now we're going to use it in a different way. We can see the Bollinger Band is essentially, it's right below its bands here, and it's signifying oversold. But what's interesting is that the 113.5 area, there's support there, and there's also, again, negative divergence. Price has made a lower low, but the RSI is making a slightly higher low. And we've got a reversal style candle. So I think what's important to remember when using this Bollinger Band is if it does go below the lower Bollinger band line and you're thinking, okay, this is a bit oversold, maybe I need to enter along, you have to use it with a confluence of other factors. You can't just rely on it in isolation. So here we're using the RSI, we combine the RSI, negative divergence, we're looking at a support level 113.5. If you zoom out, you'd be able to see that, and then obviously a reversal candle. So again, really strong, large moves downward. Are we due a little bounce, a little relief rally based on this? And in terms of where I'd be eyeing a relief rally, I'd first be looking at the round number. Obviously, these are like magnets, 114. Above there, 114.5. And then if we get a really strong rally, I'd be looking back towards this 115 area around where the 21-day exponential moving averages. GBP US dollar, we got a nice bullish candle out this morning on some good labor data that obviously feeds through into the Bank of England's monetary policy settings, as well as what the market expects them to do. So we're probably seeing a little bit of an increase in rate expectations there build up, and that's why we're seeing a bit of a nice bid in cable. Strong support here at 134, nice round number. We had the lower line of the descending channel. In terms of price targets, again, a little bit of negative divergence here. We can see price made a low there, made an even lower low, but again, the RSI didn't confirm that. So momentum was weakening on the downside, selling pressure combined with that fundamental data print we got this morning. Targets wise, 135.5 around this 21-day exponential moving average would be on the upside. On the downside, again, I'd look towards moves to this 134 area or the previous low around 133.5. Onto Euro GBP, obviously the pound strength's helping, and it's been, this lovely descending channel. Price has really been knocking on the door there. Resistance, the 200-day simple moving average when it broke that upper trend line there, helped still provide some resistance as well as that horizontal resistance there at 0.865. Again, 200-day simple moving average, upper trend line of the descending channel. Price is sold back down quite heavily now. We're at this 0.845 support level. Can it push lower towards 0.84? Well, potentially. And it would be a nice move down there towards that lower trend line. And again, we've tested that, and that would be a major support level. So that would be my target if we break the 0.845 level. On the upside, 0.85, and then above there around the 200-day simple moving average and the upper trend line of the descending channel. Moving on to the yen, we're back in this little mini range again. Between 114.5 and 113.5. Obviously, US 10-year yield sparked last week, and that's what helped it get back into this range. I potentially saw a move going back down towards here, this 50-day simple moving average, but that yield reversal helped stem that move, and now we're back in, and we sort of, the one thing that does concern me about US dollar JPY is that, future returns have been yanked forward to this previous period. They've been front loaded, and it does depend on obviously what US 10-year yields do from here, how much higher they move. But a lot of these gains have been very aggressive, and I think we could see a bit of a range bound move unless US 10-year yields spark again, and then we'll see another breakout towards the top. 115 would be my target there, and then on the downside I'd be looking around 113.5, this range support, and below there we've got the 50-day simple moving average, the previous low at 112.75. So, and if we just look at the RSI here, it was also in a bit of a range here when it was range trading, and now the RSI is just peeking its head above that 58 level. Still a bit of room if it wants to run high before we can be fearful of overbought territory. Moving on, we got the AUD US dollar, again in this nice little ascending channel. It's came back, bounced off this trend line, as well as found resistance, and it also coincided with the 200-day simple moving average there. The Aussie dollar, it's finding a tiny bit of resistance here. You can see, the long wicks to the upsides indicate that prices got up there, but then sellers come back in and push it down. 50-day simple moving average is a bit of resistance, as well as the 21-day exponential moving. If we can break through that, 0.742 resistance opens up, and above there we've got 0.75, which would be quite close to the 200-day simple moving average. RSI, no negative divergence here. Price has made a higher low, but the RSI is basically flat. So I guess you could say it's a bit of divergence. You'd expect this to be slightly higher and slightly lower, and that sort of coils it like a rubber band. Aussie dollar. Obviously, it's dependent on what the US dollar does, which has been really strong at the moment. But as I said, it is looking a bit overextended the dollar, so we could see a little bit of profit taking. This might help the Aussie move higher. Then moving into commodity land, gold, had that seriously strong upward thrust move, cut through that 1830 where it found previous resistance. Also where the RSI had found resistance, the RSI is above there now. It's creeped into overbought territory, just over 70, and price is sort of looking for its next catalyst before it decides if it can push even higher from here towards $2,000. The moving averages are the 21-day, which a bit more reactive, has moved up nicely, and the 50-day looks like it wants to try and cross above the 200-day, making a golden cross. Targets wise, 192, 2000 would be my targets on the upside, and then on the downside I'd look towards 1830, which was very strong former resistance, which would act as support now. Obviously, it's a real yield story, and inflation, So that is something to watch for gold as it regains support as as a inflation hedge. Oil looking quite interesting. It's being squeezed between this 50-day simple moving average and the 21-day exponential moving average. Um, and yeah, price is, sort of trying to look for its next catalyst. It's got a lot of factors going on. I think the most news flow at the moment is what the US is going to do to try and stem that gasoline prices, which is hurting their voter base, the Democrats, Joe Biden. They've looked at potentially tapping into some of their additional supplies, strategic petroleum reserves, or banning exports. There's a number of tools they're looking at. But yeah, we're right around this 82.50 sort of. It used to be support, now it was acting as resistance. So we're fluctuating around there. The 21-day exponential moving average is capping gains too. Apologies, is capping gains there too. And price is obviously trying to um, move higher from there. And yeah, it's dependent on obviously the catalyst and news flow that comes out. Price is being supported by the 50-day simple moving average. And from there, targets wise, I'd say if we break this 82.50, we're above it now slightly. If we can get above that 21-day exponential moving average, my target would be around the 83.5 level. And then above there, $85 would be a good one to have on the door. Below 50-day simple moving average at about $80 would be good. Um, and we can see there's a lot of support there, horizontal support as well as the 50-day simple moving average. RSI, it's below that 58 level, which has acted as resistance in some previous price rallies. If we can break through that and confirm it with price on decent volume, then 85 looks quite prominent for oil. Thanks. I hope you've enjoyed today's edition of Technical Tuesdays and found it valuable. I look forward to next week. We'll be skipping next week's Technical Tuesdays. I'm flying back to South Africa on the plane on that Tuesday. So I'll see everybody in 2 weeks' time. Thanks for joining.